Greetings, Dr. Jeffrey Scott here, and this is my weekend market update for the week ending in Sunday, November 10th, 2024, post-election, post-Fed. What a market we had. Have to ask the question, are we approaching a climactic top? Again, my name is Jeffrey Scott. The email address is hgsidoc@gmail.com. If you're new to my channel, hit the subscribe button and hit the alarm so you get notified when I put them on YouTube. And if you have any questions, comments, constructive criticism, good or bad, go ahead and respond in the remarks section in YouTube or email me, and I will respond to any and all. If you like this, hit the thumbs up. Maybe YouTube will do a better job. Not that it's their responsibility of putting me in front of other people's eyeballs. So this is for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. And trading stocks and options should be considered risky, and you should always consult with your financial advisors before taking trades. And I have tools for multiple platforms, but I am an independent trader. Oh, I put the wrong one up here. Time to time, I get invited to speak at the Wealth 365 event, and the next one will be in January. What I meant to put in here is the video about stocksanddocs.com, but I'll have a slide for that later on. Now, I have maintained a email distribution list of people that ask to get notified when I put these out, and then when I do my daily videos or any comments I have. And the challenge is, if you do that, you get designated as spam. So if you have a Gmail email address, you probably are wondering why you're not getting my emails anymore. So what have I done? I'm done with that. I'm not going to send out emails on a nightly basis. However, I am going to maintain a Google group. It's called Top Down Trader. You sign into Google Groups. You click all groups and find the one you want to join. In this case, Top Down Trader. Click Join the group. You can link or unlink your Google profile. Choose an option such as I want individual emails or a nightly digest. And then in the subscription section, choose how often you want the updates. Click Join, and you'll be part of my group. It will be platform agnostic. I will post videos and instructional videos of how I do things, how I look at the market. I may post from time to time workspaces, stock lists, and it's a great way to interact with me and others that are top-down traders. So I always look at the market, and all I could say is, wow. I didn't mean to color the 5-day here yellow. I meant to leave that as green. But 5-day change was incredibly strong. And look at what we saw. Russell, 8.7%. 5.8 on the NASDAQ, 5.5 on the Qs, 4.8 on the Spiders, 4.7 on the Dow, and 3.6 in the NYSE. That is a pretty amazing week in the market. You could see that on all of those, they're still green on Friday. So not only were we up on Friday, we're up on the entire week. What a move after the election. In fact, it seemed to be going up as soon as it looked like the Senate was going to turn Republican, even before the Trump was given Georgia, North Carolina, and Pennsylvania obviously was much later. I think it really was the Senate that drove the market higher. Now, what was also very interesting to me, when you look over here and you look at off the 52-week low, 42.8 on the Russell, 42.8 on the NASDAQ 100, 39 on the Qs, 38 on the SPYs, Diamonds up 30, and NYSE up 31. Our little Russell 2000 ETF is now leading the market, and that's a lot because of what happened this past week. What's small cap and growth? How about ARKK was up 15.9%, and that's not leveraged. IBD 50 also not leveraged, up 11.5%. Bitcoin was up 11. The Mag 7 were mixed, but they were still up 8.1. So I would say that was a pretty amazing, amazing week for the bulls. What wasn't working? Not much, but gold and silver, natural gas hasn't been working forever. Um, from a sector perspective, discretionary energy, industrial tech on top, financials, but really, except for staples, which are only up 0.8, um, everything was up over the last 5 days. This was a everything bull market. If we look at the Q Edge tool, you could see a couple of things. Despite the big moves on Friday, 73% of the sectors were up, so that means a couple of things were negative. Materials, tech, discretionary, probably some profit taking. 65% of the industry groups were up, 61% of the stocks were up. The buckets at 73% above the midline of their Bollinger Bands for the S&P 1500 tells me that we're in an uptrend. And if you want to see how extended we're getting, at least on this tool, 30% of the stocks in the S&P 1500 are either at or above their Bollinger Bands. 45% if you include the ones that are right below the top of their Bollinger Bands. Typically, markets like that, at best case, go sideways a little bit. So I really think we're at a point where a rest or a little bit of a pullback is probably coming, which is why I asked the question, are we climactic? Over 2 days, you could see strength, but look at over 5 days. All the sectors were up, 95% of the industries were up, 85% of stocks. Over 10 days strong, over a month strong. So we had a little bit of negativity, but it seems to have worked its way out of this market. Q market breadth tool, this one combines the NYSE and the NASDAQ, so it's very large. You could see this yellow dashed line was the 50. The markets came down to the 50 and just launched off of it a little bit on Tuesday, and then Wednesday was a election gap up, Thursday, Friday. You could see if you look at things like a D line, up down volume, new high, new lows, very decisively bullish looking. You look at the NASDAQ, you look at the NYSE, and one thing that's optimistic, the 3-month new high, new low, this blue line, actually eased a little bit on Friday, taking a little bit of the froth away. Maybe that goes against my thesis of the title. If we look at all the major indices, you could see that is the theme, where we did have a little bit of easing of breath, and maybe that'll take off some of the pressure for this market to take a breath. But big gaps up. I mean, these are industries, or excuse me, indexes, not stocks. Dow Jones, big gap up. Russell, big gap up. NASDAQ 100, less, but still a big gap up. S&P 1500 gap up, and the S&P 500. Here is my market timing model in my new trading app, and the reason why I use this one here, well, I superimpose the 13-week or 3-month new high, new low. But what I really like is I was able to build my timing model here so you can get a sense of how it works. And you could see the goal here, look at the S&P, it's to keep you in during the uptrend and get you out before you get too hurt on markets that pull back. And this is a weekly model, so by definition, it's not going to be whipsawy, and nor is it going to change until the end of the week on Friday. We're in a buy on all the major ETFs, Spiders, Qs, Diamonds, and Russell. And not only that, on the daily, you can see on the daily the big improvement or increase in the 13-week new high, new low. But on the daily, we went to a buy over the last couple of weeks on each of the major, last couple of days rather, each of the major ETFs. Here is a view from my new trading app that is a real-time updates, and I really love it because it shows me the ETFs that matter to me, my big four, Russell, Diamond, Spiders, Qs, and then I use the VXX for volatility. It shows me how they're doing during the day, where they opened at, high, low, percent from open. Percentage range would be of the actual move. So when it says 1.2%, it means it moved 1.2% ranged on that day. And you can see here that the Russell led closing at the 88th percentile, but you can see they all closed above the mid-range of their range, except for the volatility, which closed down. Over here, you can see on the NYSE and NASDAQ, whichever duration you look at, Overwhelmingly, new highs are beating new lows. That's great. And if you look at one-day performance, you could see at least on Friday, utilities, real estate and discretionary led. On Friday, staples, what was weak was materials, communication, and technology. What I've done here is I've built a list of, I think, 45, 47 different theme ETFs, and it gives me a sense what's working. Clearly, one of the sectors or industry groups that are happy with the Trump win is defense. Typically, you see that with a Republican win. And aerospace was up 7.8% on the week, 3.7 on Friday. Telecommunications, how much of that is X, and the Leon Musk effect, that social media perhaps. Um, Global X FinTech, decreased regulatory scrutiny. We might expect to see more, um, less regulatory on some of the financial tech companies and more M&A. Even biotech was up on Friday. You could see here on the week there were some really big movers. The fintech was one. Transformational data sharing up 13.85. And then gas exploration and production. How many times did we hear Trump say drill, drill, drill? So there are groups that are going to be winners, and there's groups that are going to be losers. And the losers are probably going to be things like minus 9.83 clean tech, lithium, renewable energy was down 8.19. So the green things are the ones, this is 20-day change, this is 5-day change, which may be losers in the new regime. I showed you in the Sagar's tool, sectors, industries up, stocks up, and then the midline in the S&P 1500. I've actually duplicated that tool here for the NYSE and the NASDAQ, and they all appear to be about the same, except notice that on Friday in the S&P 1500, now that doesn't look right here, so I may bite my lip, and I need to go check that. NYSE, yeah, I don't like the stocks up. The stocks advance percent looks wrong, so I'm not going to comment on that. Rates ease as the Fed holds true with a 25 basis point cut. You could see a little hook down, minus 1.26 on the week on the 10-year, and hook down at minus 1.78 on the 30-year. You've had pretty significant moves up the last couple of weeks, and this is really not much of anything more than flat line. And notice this line here on the S&P. How often do you see a major index going vertical? Recession in our near future. Well, 10 years certainly has crossed above, reversing the inverted yield curve. You can see it's barely above at 0.04. It has shown times where it gets above and goes back down before. Hopefully we don't see that here. And remember, there's a lag between the reversal of the yield curve inversion and a recession. Over here on the right, you can see the 10 minus 3 is getting closer but has not reversed yet. If you look at high yield index option spread, why do I look at that? Because if we had a recession coming on, you'd expect to see the money tightness to increase, and it's not. And then here, the Philadelphia Fed diffusion won't be updated until sometime this month. It was not updated at the time that we did this. Breadth broadens, but it's not overbought. Stocks above the 200, stocks above the 40 increased. Here is the 13-week new high, new low on the universe in TC2000. Neither overbought nor oversold. Current buckets, again, 72% of the stocks are above their midline, and over 25% are above it, which is a big number. Here is a interpretation of that, and we're going to have to go back and check. It's showing 19% above here on our app, but basically, when I say something is shifted to the left, look at these wider gray bars of a week ago. That means most of the stocks are in the lower part of their Bollinger Bands. When I say it's shifted in the right, it's in the upper part. We have definitely, over the last week, shifted to the right, which shows that there's much more strength in the market. And at least based upon what we're seeing here, we're getting a little bit frothy. Where are we the most frothy? This is large caps. This is the NASDAQ, NYSE, and S&P 1500. We're kind of equal frothy in all of them, that they've all had such big runs. Are the Hindi signs negated? I think so. I'm not worrying too much about them, but or at least I'm not worried right now about a massive correction. But I am watching those new highs and new lows. And look down here, 10% of the NASDAQ on Friday had a new high, 2.67 had a new low. So even though the market is incredibly strong, not everything is working. Now in the NYSE, you have almost 14%, 13, 14% new highs and 1.65, 1.85 new lows. Super strong market. So no, I don't think this Hindis, let me backtrack a little bit, are negated. I think it still tells you you've got heightened risk. It just feels like, we need a pause to refresh here. Um, but you know what? We got CPI, PPI, we got some more jobless data this coming week, and we got a boatload of Fed heads. If somebody talks down a Fed rate cut in December, does that mean the market's going to respond negatively? If we show inflation coming up on the CPI and PPI, will the market respond negatively? If we have a huge beat on jobless now that we've worked through the hurricane. So I think it's going to be interesting to see what happens. Now, if you look at performance of the market, and what I do is I take the individual stocks, I assign an ERG, and ERG is EPS rank plus relative strength rank plus group rank. That gives you a total up to 297. And then I look at performance based upon ERG, and you could see, well, first of all, you see this little gray line that shows you how many few stocks are down here. I throw out the tail. I throw out the head. And in the middle, I have a line that's lower left to upper right. Everything's above zero, but the biggest returns were the higher growth stock names. Down here, you can see EPS rank and relative strength rank were associated with a better return. Interestingly, A and B the prior week, meaning accumulating stocks, actually outperformed this week. So less rotation, well, less junk off the bottom, and more story about rotation perhaps back into growth. Now, proof of that, if you look at all these groups that I create every week and track, the IBD 50 from a week ago Friday, 92% of stocks were up for a gain of 10.63, small cap growth. IBD weekend review, 8% return, 89% of stocks were up. Now I have a growth portfolio, and if you look at my buy list and the holdings I have, a little bit less than 8%, a little bit less than 80% of them were up. Market Smith, 7.5%, 86% were up. My high relative strength stocks, 78% were up for 7.2%. The S&P 500 was up 4.75. What an incredibly strong week. Know your news and earnings. If you look over here on the left, all those arrows are Fed heads, and as I mentioned, will they talk this market down? And then if we look over on the right, you see earnings releases. We still have another big week. A lot of the S&P 500 names have reported, and we know from the last couple of weeks a good report is very bullish. A bad report gets clobbered. So we soared on a busy week that featured lots of quarterlies, the rate cut, and the outcome of the congressional and presidential election. I'm doing this on Saturday night, and when I looked at where we're sitting right now for Congress, obviously Trump's got over 300 electoral college votes, 52 seats for the Senate. Maine and Vermont look like they are potentially got independents because they're purple. Not sure what that means. It's an independent in Maine, and I guess Bernie runs as an independent. That's not an independent. And the House has not yet reached a majority. There's still a lot that are going on. But I think the market certainly voted, and I think it really happened when they saw what was going on in the Senate. You see what happened on Wednesday. The big gap ups Tuesday night overhead after hours really continued. A 1,500 point move on the Dow, 5.8% on the Russell, 3% on the Nasdaq, and 2.5% on the S&P 500. Wow. Powell seemed to marvel on the strength of the economy and policy. How unusual is it to see rate cuts when we're at all-time highs in the market with inflation falling? Growth cuts, especially small cap growth, 50 and ARKK rocketed higher. Small caps joined the party. My long-term model was buy going into the week. The short-term all turned buy on Wednesday. And our accounts benefited from bullish behavior, but not all sectors benefited equally. Question now is how long do we go higher before we correct or at least consolidate? Individual stocks are getting extended, as are the major markets. I'll tighten stops, let my winners run, let my stops get me out of the market. I will consider new longs until we see actual bearish signals. But with multiple Fed speakers, CPI, PPI, jobless data, and more, we'll have plenty of opportunities for disappointment. This is what I meant to show earlier, my stocksanddocs.com site. And for those that are interested that want to get notified when I post things, some of my thoughts on the market, some of the lists that I might give out, consider joining the Google group so you can get the email updates. And now on to the charts. So here's wealth charts. We'll start with that one today. We may look at other platforms, may not, depends how this goes. This horizontal line represents the prior week close. You could see Monday we did absolutely nothing. And then on Tuesday, election euphoria, excitement, whatever, we saw the market right away move up and then coast sideways into the close on Tuesday. As I mentioned, we had a big after hours session Tuesday night with the returns coming in, and then big gap up on Wednesday, continued Thursday, and Friday maybe at the end started petering out. But what a massive move on the week. And if we want to look at the other ETFs, it's really hard to say that anything is that different. All I could say is what a great week for the markets. If we look at the S&P, for example, we now have a MACD divergence alert. RSI divergence doesn't mean we're divergent yet. It just means to be careful. And notice the giant gap up here, the move of 2.5% on Wednesday and continued move higher. If you look at the weekly on the move, you could see after a little bit of a flag, massive move, 4.75%. Looking at the Qs, also had a RSI divergence concern and just broke right through to now, like the spider. Let's go back to the weekly spider, all-time high. Let's look at the Qs. Let's switch it to a weekly. All-time high. Switch it back to a daily. Let's look at the diamonds. Broken record. All-time high. So what's new there is the Qs because they have not set an all-time high for a number of weeks. And guess what, folks? The prior all-time high on the Russell was 244.46. We certainly set a 52-week high, but we are getting close. We are definitely getting close on the Russell. If we look at a weekly on the Russell, here's the all-time high. So we are just below the all-time highs from 2021. Wow, what a great week in the U.S. markets. If we look at volatility, let's look at the weekly VIX. You could see, interestingly, despite the massive move in the market, and that looks like it's the wrong week because that's October 28. So let's look at the UVXY and let's put that on a weekly, using that as our marker of volatility. And I'm going to have to find that little puppy here because it's so compressed. This is what happens when you get lots of reverse splits and stuff. Well, let's just put our little thing over there. Down 30% on the UVXY on the week. Wow. And the dollar continues to be strong and up 0.68%. I guess it doesn't hurt that we're going to have an orderly transition of power. So markets are up. The dollar is up. We've come off the highs on the metals. Here was the peak on gold. On Friday, we were down 0.68. Silver has pulled back into the 50, down about 2%. Oil is sort of trapped in here. OPEC is delayed their increases in production, but you still have Israel and Iran. Somebody's got to be concerned about consumption, and you can see oil sort of going sideways. Natural gas, you're trying to think of all the things that might be winners under the new Trump era. If you think about it, natural gas is really expensive in other places. It's just really cheap in the U.S. What happens when we can start get some decreased scrutiny on the regulatory issues around LNG shipping? That could be a winner. Now notice we're bouncing off sort of the place that we fail or we hold on natural gas. Where we fail is the 200. I think at some point natural gas is going to break out, but boy, it hasn't yet. And then 10-year we know came down. All right. If we look at sectors, these are all ratio charts looking at S&P sector versus the spider. Now last week the stars were communications, and then the other one that we liked was discretionary. Well, discretionary is still the star, so I'm going to move that up. Try and move that up. There we go. So in case I forget what was leading, what else looks good? Staples, real estate, utilities, maybe a little bounce on Friday, but you would expect with the week we just had that the defensive sectors to lag, and they did, as did healthcare. Now, everybody could be up, but this is a relative performance versus the SPY. The SPY is going to be sort of a combination of all of them. So, outperformance is great, but underperformance doesn't mean you were negative. You can see the strength of Bitcoin here, not an S&P sector. Look how weak materials were. Communications still strong. Energy neutral. Financials gave up some of their strength. Industrials look good. They're probably another benefactor of Trump 2.0. Technology held up okay, but it really was about discretionary. Go into the scanners. Actually, let's go to seasonality first, because we talked about this last week, about how we are in a very strong seasonal period of time for the markets. Let me advance it 1 week. So make sure I got my weeks right. That's not right. Oh, that's where we are now. Let's push that up. So let's take this to the week we're at right now. We'll leave it to the 6th, which is the closest day. And then let's look out 4 bars to December 11th. If you look at, try to find what are the bullish, look at the Russell over the next 4 weeks, 3.42%. If you look at over the last 10 years, between November 6th and December 11th, remember this is the strongest time of year, the Russell averages a 5.74% return, up 8 out of 10 years. The Spider, 9 out of 10 years, average return 4.18. The Qs, up 9 out of 10 years, average return 4.1. People say this is the strongest time of the year for a reason. It is a strong time of the year. If you look at the NASDAQ 100, for example, and look out over the next 4 weeks, FANG is not the FANG stocks, it's an energy, not so hot, although it's projecting 8.79. AMD is one that does really well this time of year, 8 out of 10 years average return 13.29. So we're in a very strong seasonal time. Doesn't mean we can't get a correction here, but in a very strong seasonal time. Now let's see if this is going to work this time. For whatever reason, it wasn't scanning my combo list last week, and now it is. Yes, perfect. All right, so this is a list I put together of fundamentally and technically attractive stocks. Um, I'm looking for pullbacks and uptrends. And oh, by the way, there's hard to find current pullbacks with what we've seen in the market. Um, if we look at AAOI, for example, now sometimes I got to reset. So let me do a quick reset and kill my broker feed because that will seem to help the issue of getting those to populate fully. All right, now let me move back before I go there to the heat map. Let's take a look at the MAGA stocks. So just to remind you, the color reflects the day and after hours market. The chart on the right is just the daily. If we look at NVIDIA, massive run, sort of an inside bar-ish day on Friday, down 0.84. Clearly profit taking. All-time highs were set this week. Looks to go higher. Uh, we'll see what happens as it gets into earnings. Tesla, Elon Musk shows it's good to be friends with Trump. What a massive move, finishing up 8% on Friday. Amazon, a lot like NVIDIA, massive breakout, just an inside bar on Friday, sort of a pause to refresh. Microsoft still struggling on the 200. Meta, a lot like NVIDIA and Amazon, just a little pause to refresh in the setting of a big move up. Apple, um, sitting at free parking. The Mongiorno King struggling now after a sell-off. That was Lilly. I know it's not a MAGA stock or a MAG stock, but I thought I'd look at it. And then Google. Google's had a nice breakout and paused on Friday like some of the others. So, the Magnificent 7 or 8 stocks don't look bad. You got to love Tesla. And then NVIDIA, Amazon, Meta all look good as well. One thing I didn't see here is Netflix. So let's just type in NFLX. I know it's right in front of me, but sometimes when you're doing a video and it's right in front of you, you can't see it. Netflix looks like the others. Massive move. Pause to refresh on Friday. If we go into the wealth scanner, I expect to see big changes here from a week ago when we saw very little above 700 and hardly anything at 800. And notice the whole board here is above 800. Cloud computing, computer software, transports, core small caps, Russell 2000, Russell 2000 value, regional banks. Regional banks, you see the gap up they had, their potential big winners. There's too many of them. We need some M&A. That might be better off under a Trump presidency. We might see steepening of the yield curve, which is better for regional banks. Small caps, big banks, biotech, these are all above 800. Mid caps, Russell growth above 800. Um, Short-term future, UVXY, mid caps, internet, communication, MLPs. I don't hardly ever remember a time when I saw so many Russell 2000 ETFs, growth and value, and others in this list up at the top. So what a market we have. Now, let's go to the CAT scanner, and typically I'll look at my combo list. I do want to point out a couple. This is the monster stock, AppLovin. 35% beat. Look at the earnings compared to the previous 30 cents. Now it's $1.25. You just wonder how high this thing could go. It looks like a climax run. High jumps at 100. I'd be reluctant to chase here, but I would have said the same thing the day before. But what a beautiful, look at that massive volume. Look at all those green dots coming in. That is an amazing looking stock. What else did I see up here? AAOI, broke out on earnings, probably too far to chase. You're going to probably see it at 100 here. Look at relative strength and OBV. Can these things go higher? Yeah, but there's so many stocks that I looked at over the weekend that show the same pattern of massive moves. Look at the volume. Now look at the day before. You had big volume. The day before that, big volume. But you also had earnings with a 23%. Actually, it's inferior. Their earnings were negative and the stock went up. Must have been some news about the bad news is behind us. Um, Aon and insurance, in the insurance industry, they've been leaders for some time. Insurance, 4-dot move, 3-dot move the day here. Actually, 2 days before you had this move, and then you had earnings come out at a 10% beat. Is it possible to buy these? Sure, you can buy them, but boy, these are not pullbacks in an uptrend. These are rocket ships, and there's not much in the pullback left. Arbor Realty Trust. All right, so here's something that big ran up, pulled back, an EMS signal came in, breakout momentum. I mean, it's just not that exciting. And notice we've now dropped down to the 2. So that suggests to me there's not that many uptrends left. Let's look at rockets. Let's rank them by dots. And Doximity, again, another earnings play. 20% beat. This is a social network for physicians and other healthcare professionals. Earnings came out, gap, massive volume, breakout, momentum, relative strength and OBV, but it's at 100% on the high jump. Here's one that's not extended, GigaCloud, a tech stock in the cloud space, obviously. Pretty massive beat, 98 cents versus 67. I own some of this. It's got to get through the 200. Unlike the others, it's not extended. Relative strength and OBV look good. That's one that I'd be watching. Upstart. I think this is AI in the insurance industry or something, or in the credit industry. But nice stair-step uptrend. You had opportunities to get in the last couple of sessions. You had on Wednesday, you had 3 dots and a nice move, but not extended here. But boy, 4 dots, earnings beat, lost 6 cents instead of 15 cents. That's a beat. But the high jumps at 100. Axon, remember this? Taser? Holy Toledo. $610. My God, $140 move on Friday? 28% move. Wow. But how do you buy that up here? Motorola Solutions. Talk about a beautiful leader. Gapped up, closed near the high, 7.37%. But again, these things are so extended. Toast. I love this company. Everybody is starting to use the we'll pay you at the table side, and this is one of the transaction machines. Big move up, gap, volume, momentum, broke out a few sessions earlier. You had multiple days to get in, but who's going to get in before earnings? 7 cents versus a penny. When you see an earnings move like that, it almost thinks something's changing in that stock, and maybe even though it's extended, boy, these are not without risk. So, Fortinet, pull back, a couple moves, and then earnings come out in a 21% beat. Wow. Now, I did notice an Axon is actually the defensive, so let's see. Do I have a group of defensive stocks? Defense. I don't know if I ever built a defense. Aerospace, defense. I do. All right, aerospace and defense. And let's just take a look at what's here, and are any of them actionable? We looked at Axon, FTAI Aviation, another beautiful, steady, straight line up stock, pull back into the 50 and breaking out. Relative strength and OBV looks good. Not at 100%. That one looks interesting. HWM, Howmet Aerospace. Gapped up, a little bit of a flag forming. Had earnings come out over here, 9% beat, 90 in the high jump. You could potentially look at that. L3 Harris Technology, pullback and then a breakout. Earnings were back here, 2% beat, extended though. Intuitive Machines, a robot company, don't know much about it. Kind of a nice little pattern here, a base and now breaking out. Look at this wall of green dots, not at 100%, decent relative strength in OBV. Redwire, no idea who they are, but the aerospace rocket labs. I've seen some interesting figures on space and what the valuation could be of these space stocks. I'm not in any of them, but I'm starting to wonder if I should be. And then Triumph Group, it's kind of choppy in here. So of these, Axon, FTAI, HWM look good, LHX look good. So there's some interesting there. Another thing that I like to look at are stocks that have high relative strength, growth stocks. Now, for a long time, it wasn't worth looking at these things because growth wasn't working. And so let me just put all the momentum up. So let's start with the pullbacks and uptrends. Aon, Upstart, American Superconductor Corp. So it's a semiconductor company, kind of a cup handle breakout. It's a funny kind of handle, good volume, breakout momentum. 93% to extended, but not over 95. Relative strength and OBV look good. There's Axon. Embraer, they make regional jets. I'm sure they make more than that. Pullback and a breakout here, kind of a pretty move. Massive volume, must be some earnings. There were doubled expectations, $1.20 versus 6 cents. Not extended, relative strength and OBV look good. KTOS should be in the defensive category, breaking out here to what potentially are all-time highs. Let's see. Or certainly, nope, not all-time highs, but a nice breakout here. We looked at Motorola. Insulet, we talked about this last week. So 1, 2, 3, 4, 5. And I think we talked about it on one of these days. This may have been the bar I talked about it on in one of Stocks and Docs. But ran up, beautiful breakout here, but certainly getting extended from breakout from a high base. Boy, there's a lot of beautiful stocks. It's just amazing how a couple weeks make a difference. Again, probably stock in the market right now is app, but how much further can this thing go? I tell you, its fundamentals are pretty impressive. In fact, let's pull up, take a second for TradingView to boot, and let's put app in this. So there's a lot of stuff here. I'm not going to explain everything that's on my chart, but let's just look at app and list. So November earnings, 36% surprise, revenue a 6% surprise. Year over year changes, 300%, 300%, 6,800%, 333%, 400%, 467% on earnings. Changes on revenue, 39, 44, 48, 36, 21. This is a growth stock extraordinaire. It's probably would benefit for a pause, but who knows? Wow, that's all I can say about APP. So I've said a lot. We're at 45 minutes. I've looked at a lot of stocks. I'll put up some of the ones that I put on a buy watch list. They're not all necessarily there because they need to be bought. A lot of them just need to be watched. And some of them are on more than one time, which is weird. So let's kill that one. All right. Let me see if any of these I didn't talk about that I would want to mention. And oh, this is combo leaders. That's not my buy watch. I don't have that many. Here we go. RTX is another stock in the defensive play. Here's one that's actually pulled back to the 50. had breakout momentum, recent squeeze. I'd be watching that, which is why it's on my watch list. That one looks interesting. AT&T, um, telecommunications, nice uptrend, pays a nice dividend. TGTX is one of the ones that I own. It's a biotech breaking out. Talked about this one last week, Adama Biologics. On this move here, and it broke out. It's got great earnings as well. 15 versus 13, 15% beat. AZEC is in the construction, kind of a junky chart compared to the others, but when you push it back, big uptrend, complex pullback, is it getting ready to break out? Costco, I have a hard time in my mind with its price to earnings and stuff. In fact, and again, I'm not a fundamental guy, but I'd like to buy growth at a discount. And when I look at Costco, for example, and I know this is probably hard for you to see, next earnings are December 12th. I can make that bigger. I can go to settings. I can go JAS funds. I could go to configure, and I can make the text size huge. There we go. PE forward of 175. 175. You can see the earnings growth. You can see the revenue growth. I just am troubled by that. And in fact, you could argue there's a lot of stocks in the market that are priced beyond perfection. But Costco's breaking out again. General Dynamics, another defensive play. Not yet, but it's at the top of its range with the others breaking out. Might be worth watching. Generac, industrial, might be a benefactor of all these hurricanes we've seen down here in South Florida. A lot of these we've already looked at. ResMed, they make CPAP machines and others. Um, they took a little bit of a hit because people thought that the Mounjaro, Wegovy, Ozempic weight loss would put people's sleep apnea out. I think it's a long time before we change that world. Breaking out here looks interesting. And I think that's enough. So people have asked me, who do I think is going to benefit from Trump? I'm doing some work and I'll maybe even do a video about it later on. But there's certain things. You've got to figure under Trump, regulatory concerns will be reduced. There's a lot of tech companies that are acquisition candidates. Maybe the appetite for acquisition goes up. Too many regional banks, put the context of a rising yield curve in an easier M&A environment, will banks be taken out? Okay, that's another positive thing. I mentioned the LNG as something to think about. Interestingly, clean EVs, lithium, marijuana did not move much in this market, and those are probably not great Trump stories. The whole China thing and the tariffs, probably much more beyond just the Chinese stocks. What's the impact on goods I buy at Costco? So I think there's a lot of moving parts. Again, I'm doing some research and trying to come up with what I think and what I expect. But I play technicals. Now, I just showed you fundamentals, so is that fair to say that? It is. To me, the most important fundamentals, to me, is revenue growth, earnings growth, and the multiple. I want growth at a discount. I want a great chart at a fair price. I'm troubled by the valuation on something like Costco, but technically, the chart looks good. So if you're a technical trader, do we really care what the impact of Trump is? We buy off the charts. But I do think there's probably going to be winners and losers, and we'll talk more about that in the coming weeks. Have a great week in the market. I do think a pause is going to come. And when you look at where we're at, all those Fed speakers, a CPI, PPI, and jobless claim. How much of bad news or too good news does it take? Have a great week, and um, seriously consider signing up in my Google groups. It's not to advertise, except I will tell you when my app goes to market in the group. I will tell you in the group when I do live sessions. Um, I'm not going to spam you. So if you want to give it a try, there's no cost. And I'll put market commentary most days and post a little video with one of the tools. As I mentioned, it's platform agnostic. I've got tools for TradingView, TradeStation. Um, I have a trading app. Metastock is coming out. And then the first one, and the one I appreciate the most for putting me there, was Wealth Charts with Rob Hoffman. Have a great week in the markets, and I hope you were long.